Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Global markets are navigating a complex web of regulatory shifts, corporate pivots, and deep-seated valuation fears. The landscape is changing fast, and liquidity is the new currency. First, look to the digital asset space. Kalshi has officially launched its US-regulated crypto perpetual contracts, marking a significant milestone for institutional-grade derivatives. Bitcoin is leading the charge with a staggering 5.9x leverage ratio, signaling intense speculative interest. However, this liquidity test is not without risk. Altcoins like Solana and XRP are facing immediate pressure as traders assess the depth of this new market structure. The move suggests a maturation of crypto markets, but it also exposes these assets to sharper volatility as leverage unwinds. Meanwhile, in traditional finance, a distinct flight to safety is underway in Asia. Chinese borrowers are rapidly shifting their capital allocation from equities to bonds. This pivot comes as the Shanghai Composite Index fell 2% today, reflecting growing economic uncertainty. Investors are fleeing riskier equity positions for the relative stability of fixed income instruments. This capital flow shift highlights a broader lack of confidence in Chinese equities, forcing companies to seek debt financing over equity issuance to preserve value. In the U.S. tech sector, the autonomous vehicle race is intensifying with massive capital commitments. Uber has committed $500 million to secure its Robotaxi fleet, locking in critical partnerships to counter Waymo's growing dominance. The market reacted swiftly, sending Uber shares surging 5.5%. This aggressive spending underscores the high stakes in the self-driving industry, where first-mover advantages are being bought, not just built. However, not all tech sentiment is bullish. Oracle shares slipped 2.6% as investors weigh the risks of its reliance on OpenAI's cloud infrastructure. The drop reflects broader skepticism within the software sector regarding the sustainability of current AI spending models. Investors are questioning whether the current cloud revenue streams can justify the massive infrastructure costs, leading to a cautious re-rating of AI-dependent tech stocks. On the macro front, the mood is decidedly cautious. Jeremy Grantham of GMO has issued a stark warning, predicting a potential 70% crash in U.S. stocks. He cites a historical 60% premium in price-to-earn ratios as evidence of an AI bubble. Grantham points to Bitcoin correlation patterns and recent ETF outflows as early signals of a broader risk-off sentiment. His warning adds weight to the growing debate over whether current valuations are detached from fundamental realities. Looking ahead to today's release, the economic calendar remains relatively quiet with no major high-impact data points scheduled in the next 36 hours. This absence of fresh macro data allows markets to digest the corporate and regulatory news flow without immediate interference from economic indicators. Traders are left to parse the implications of Kalshi's launch, Uber's spending, and Grantham's bearish outlook on their own. The key takeaway is a market in transition. Regulatory clarity in crypto is meeting corporate aggression in tech, all while macro fears loom large. Liquidity is being tested, and valuations are under scrutiny. That's your market briefing. Follow Rumour with AI for daily market intelligence.